Melbourne's vacancy rate is up 140%. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. I've got my stein of coffee and I want to go through an article that was sent to me by a viewer from Domain discussing, Melbourne's soaring vacancy rates and how much they've increased. Now, before we go through this, there's just a few things we need to think about, because we've been discussing property vacancy rates for some time. Remember when there were first announcements that all of a sudden Airbnbers were starting to flood the market, the short-term holiday rental market was starting to flood and flip over to the long-term. Viewers were sending me messages of how they were tracking properties. And all of a sudden, those that were furnished started appearing. Furnished, fully furnished. And you knew it was a former rental, a former holiday rental that had been flipped over to try and get someone long-term in. Now this, it materialized in the market down in Hobart and Lonnie in South Australia, in Tasmania significantly. The numbers just started flooding on there. And now with our border closures, that's the first thing from state to state. You can't even go on a holiday. So, local people can't even get an Airbnb, let alone international people, migrants, or international students. Then the fact your businesses have been locked down as well. So business travel also has taken a huge hit. Culturally, we've all shifted to an online method more and more, and we'll have to see if that has a legacy impact. If it continues, if we continue in these habits to not need offices or not perhaps to travel as much, and if this will affect all of these investments. Now we have to all remember as well that Australia, we're property obsessed here. We are property obsessed. A significant portion of our wealth is in property, either in houses that we own or investment property. And we can't forget now, I'm still haunted by that article we looked at a few months ago on ABC about the teacher who had invested in not one, not two, but 5 properties. 5 properties, and he was hoping he was just playing the equity game and paying interest only. What would happen in that situation if your tenants disappeared? Yesterday we were looking at declines in rental revenue or asking prices for rent. In Sydney units, it had fallen back to 2013 levels, everyone. Back to 2013 levels. So the fact that we're seeing this soaring in vacant properties in Melbourne is a big warning sign, and it's going to manifest in the prices for some of these units. It's going to affect the valuation for these properties because it'll affect the yield you can get on them. I mean, that should make a difference. So arguments that the property is going to keep soaring up and keep being strong and good. Here's a counter argument. And remember, at first, the property correction first will manifest in the investment sector. And the investment sector, the decline in value there will manifest in your property because your property isn't worth what you paid for it. It isn't even worth what the bank says it is. I look at my bank's valuation of my house and I know it's utterly ludicrous. They've been given a little bit of freedom to not reevaluate their portfolio as much as they've had to in the past. It's all in line with these other the banks being our friends, the bank's holidays and the bank's extensions. So the value of your property is what someone's going to pay for it, and that's influenced by the last sale in the street. If that happened to be an investment property, if you've got a unit and happened to be another one in the complex, there we have it. So a big spike, over 140%. So let's have a look at this. And let me know in the comments if any of you are surprised. Before I go into it, I'm going to have a shot of coffee. So, the number of vacant rentals in Melbourne has skyrocketed, with properties flooding the market and causing a spike in empty listings of 20% last month alone, new data has shown. So, a 20% spike in empty listings. New data from Domain has laid bare the impact of the Stage 4 lockdown on the market, revealing the portion of available empty rental properties is up a whopping 140.7% compared to the same time last year. There we have it, everyone. There's that 140%. And of course, these Stage 4 lockdowns are just going to exacerbate it. You Can you even inspect a place? Can you even go and visit? And there are going to be some people that, don't forget all the people that are worried, that are concerned. This is the first recession now Australia has had in 28 years. And it's a doozy, everyone. It is the doozy. The GDP fall is worse than anything we ever had. Frydenberg was saying last night in his speech when we went through it. The last big significant fall in GDP was 2% back in the 50s. We had 7% last quarter. So there's going to be people that'll be moving home. There'll be people that'll be downsizing. There'll be people that'll be renting out an extra room to get income. They'll bring borders in, looking at ways to make their dollar go further. That's also going to have an impact on this. I think one thing we're going to see is let's just say the Australian quality of life is going to have to take a hit, as it does in every recession. Some of the things that people thought they couldn't do without or a necessity, they're going to learn are not necessities. The luxuries of maybe not being able to share out a room, that's going to disappear. People are going to have to live together. People are going to have to save. And that's also going to hit this market as well. And that's going to manifest in investors. And remember, here in Australia, most of the property is owned by other people, other mum and dads. So that's going to affect their spending ability, and that will flow through in the entire economy. So it really is quite the feedback loop of negativity with regard to the economy. We're so obsessed with property. We're so tied into property. It really is a house of cards, guys. It really is a house of cards. Everything's been thrown in it. And this is why arguments that property is going to go down will have corrections. The RBA's modeling of a 40% valuation decline, which is they consider plausible, not likely but plausible. I think people are going to be shocked if that actually happens. There'll be some people out there that will be utterly shocked. You will see reports of people crying on a current affair. Why didn't the government do something? Why didn't the government step in? How did they let this happen? And I'm hoping that that doesn't cause a shift for more government intervention into real estate, into property, into the market. I mean, there's already enough. There's too much. But we'll have to see, guys. So Melbourne's vacancy rate, which represents the portion of available empty rental properties, relative to the total stock of rental properties, hit 3.8% in August. And that's the increase. It's gone up from 1.6 to 3.8. And how about we just go through, highlight some of the points in this article. If you want to go through the whole thing, I'll link to it. Nicola Powell is saying the ban for in-person inspections is the issue. And once again, no net international migration or tourism, as well as, I'd say, international students. And I wonder if we're going to see an exodus of Victorians leaving the state. I know there are a lot of viewers of the channel who are expressing desire to leave. I think there'll be a lot of people that want to get out. But sadly, I don't think it can, I can see the exact same thing happening in Queensland. I can see the exact same happening in every state. Hopefully, New South Wales remains at least not as restrictive, so it's a good contrast so people can see what happens with these more socialist-leaning, authoritarian political movements, where they're justified ideologically, they're justified in forcing money from one person to another. That's only a few little hops, skips, and a step down to restricting your freedoms. So maybe we'll see an exodus of people leave Victoria. Let me know in the comments if you intend for that. So we're going to still see weaknesses in terms of rental prices. But yeah, that's it. So a lot of demand from overseas. We'll have to see if that comes back. And here's some of the other capital city vacancy rates. Let's have a look at this chart. Sydney, August, 3% in 2019. Now it's 3.5. Melbourne has gone from 1.6 in 2019 up to 3.8. Brisbane, we're the same, 2.2. And one thing they're saying, once you hit a 3% vacancy rate, that's considered a renter's market. So Sydney and Melbourne should be renters markets. Brisbane, not quite yet. I remember the last time we were looking for an apartment before we got or a house even. There were so many people there. You had to line up. You had to have your paperwork done. All these before, when you were just inspecting, and people were offering above the price. And that's where I thought, you know what? No. We need to buy something. I don't care. I don't care how rundown it is. I don't care how dodgy it is. We need to buy. I can't be putting up with this. Perth has gone down from 2019 from 2.7 to 1%. Adelaide has gone up a fraction. Hobart from 0.4 to 0.6, up as well, year on year. Canberra is down year on year from 1.1 down to 1. Darwin has gone down significantly from 3.4 down to 1.3. What's been going on in Darwin? What projects have been driving a demand for rental there? And nationally, it's gone up 1.1 to 2.1. Dr. Powell notes the CBD unit markets in Sydney and Melbourne, and we saw that. We saw that yesterday. We saw investors are starting to offer 15% cuts on their units there. And here's the vacancy. We've had to look at this chart. This is the delta change, year-on-year percent change. Melbourne up 140%. Sydney up 16%. Hobart up 37.5%. And that's some of those Airbnb properties which are flooding the market. We can see, rental vacancy rate and seasonally adjusted. It's going up, guys. It's going up. So it shows you Melbourne's vacancy rate has climbed up a significant portion, over 140%. And, well, this looks like this is not really a surprise to a lot of us who've been following the market. This is going to happen. This is going to hit the investment properties that people have. Now, the question is, those investors who have these properties, how much of a hit can they take? How long are they able to sit on an empty property? When you invest in a property, you've got a return, a yield. Now, a portion of you should calculate into that an allowance for the property being vacant for a period of time between tenants. That's just common sense, and that should all factor into your calculations and your sums. Now, we've got an economy that's being propped up by JobKeeper. We've got mortgage holidays that are going on till next year. You've got a job seeker bonus. All of these things inflating us up. We have trading while insolvent right now, but we also have a market where consumer confidence is, I'll bring up this chart, is tracking down, where unemployment is up 7.5%, but also where our savings rate is at an insane level. I need to get a chart for that to bring up to show you, but our savings rate, we're at over 19%, something insane for Australians. We're not savers, but now we all are. So how long can these investors hold out with these properties? Are we going to start to see a flood of the market? Will that manifest? It won't happen overnight. Property takes a while. People are emotionally attached. They may just hope for the best, hope for this V-shaped recovery and hold on, and perhaps too long. Or will we start to hear about the quiet taps on the shoulder from the bank going, you need to liquefy, you need to get out of this? Will it happen this year or will it happen next year? These are all things to consider. And if we start seeing investors fall more and more, which we're already starting to see, that starts manifesting in Melbourne and then in Brisbane. How's that going to affect the rest of the market? So why are we seeing articles where people are saying, jump in now? You tell me. So there we have it, guys. Melbourne rental vacancies are up over 140% from last year. That is a huge move that's going to affect the investor sector, and it's something we need to keep our eyes on. If you have an investment property, take care of your tenants, guys. Take care of them. Keep them in there. Keep that cash flow coming in, because you don't know how long you can sit on there. Because here's the thing. Here's sadly the thing with a lot of these units. You go around and you have a look at them. You're competing with everyone in your own building. You're competing with everyone in your own complex. There's stories of people going from one apartment to another and getting a huge rent discount. So there we have it. As always, please let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve or Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care everyone, have a great day, and I will see you in the next video.